I do want to, at this point, bring in our next guest here, Eddie Ghabour, co-owner at the Key Advisors Group, to talk more about these markets. Eddie, what do you make of the numbers? 803,000 Americans filing for first-time unemployment benefits in the latest week.
Look, obviously it's a better number than the street expected, but I don't think it's anything we should spike the ball about. The bottom line is there's 800,000 new claims, and this just supports the fact that we need targeted stimulus. There are a lot of families right now that are suffering. To your point earlier, if you're employed, you're probably having a wonderful year. But imagine being someone that has not had a job all summer long and just sitting by waiting for stimulus. These numbers are only going to get worse, unfortunately, in my opinion, as COVID spikes continue here in the winter months and more possible shutdowns, depending upon what state you live in. So is it good to see the labor market bounce from March? Yes, but we've kind of stalled out the last few weeks, and I'm afraid it's going to get worse before it gets better. So we need stimulus right away.
Okay, so what does this mean for the economy? And the big question has always been, will it have any impact on the markets?
Look, one thing that we have shown and proven is the stock market is not the economy. The stock market is forward-looking. We think the market's going to have a monster year next year. That's our opinion. And the main thesis behind that is because of the amount of pent-up demand on the consumer side that we feel strongly is going to pour into the economy in the second half of next year. So the market, we feel, is stable and has plenty of upside. Still volatility, of course. The labor market and the economy in the sectors that have been hit the worst, like the restaurants and travel space and gaming and entertainment, they're a long ways away from getting back to where they need to be. So this is an uneven recovery, and the stock market, again, I can't say it enough, is not a reflection of the overall economy.
Okay, so it's been interesting as we talk about the stock market here, Eddie, as the expectation is that the unemployment numbers are going to increase as hospitalizations and deaths, unfortunately, do rise to records in this country. When we talk about the stock market, the concern has been that January, there might actually be a correction. We had a guest on yesterday, Bob Iacchino, saying that January could see a correction based just on a repositioning as we enter a new year, but then he agrees that we will move higher in the stock market from there. For Americans who are on the sidelines and might, we know based on precedent, what happened in March, use a $600 stimulus check to put it into the economy and to put it into the stock market, what do you anticipate ahead for the stock market in the new year in January and beyond?
So we do expect a Santa Claus rally here to close out the year very strong. Some of the technical points we look at look really good. We've told our clients that we expect an 8 to 10% correction sometime in the first quarter next year. To pinpoint an exact date is impossible in my opinion. But again, in a cyclical bull market like we feel like we're in right now, those are normal. So if you're diversified and have the right allocation, one thing this year should have teach you is not to panic and get out. And if you've got cash on the sidelines, I would look to put that in during that drop in the first quarter that we expect, because that might be your last opportunity to take advantage of the bull market that we're expecting in 2021.
I mean, long term, this market has just surprised many people. I mean, the wealthiest billionaire investors who have been hedge fund traders and managed their own portfolio for decades, like Stan Druckenmiller and Paul Tudor Jones. Is there anything, Eddie, that could actually see a correction? I know you're very bullish, but realistically, I mean, can we stall out in this bull market and maybe see more of a reality set in here for stocks?
Of course, we could always be wrong in our thesis, but when you look at the backdrop, the Fed has created this. Our government has created this with the amount of massive liquidity that they put in the marketplace. I don't think the average person understands how much liquidity is put on there. Plus, the fact that we're talking about how many people still don't believe in this rally is another reason why we're bullish, and that's reflective in the amount of cash that's on the sidelines. So when you look at the Fed, you look at the pessimism, you look at the amount of cash on the sidelines, and you put a vaccine on top of all that, I just don't see how the economy recovers strong in the second half, and the stock market reflects that.
All right, Eddie Ghabour, we got to leave it there. He's the co-owner at Key Advisors Group. Eddie, thanks for your insight.